This morning we heard about the Global Risk Report 2014 from the World Economic Forum. Can you tell us some of the key highlights of that report and a little bit how this comes together and also the role of you and your organization in drafting it?
Sure. Well, Zurich is one of the three commercial partners with the World Economic Forum producing this report every year. This is the ninth edition. It has three parts. The first part is the results of a survey of 700 experts, leading academics, business leaders, politicians, and so on and so forth. The second part covers three risk areas in more depth. These are around some geopolitical risks, some socioeconomic risks, and cyber risks. Those are the themes for this year. Of course, each year those different themes are explored. And the third part is really looking ahead to where the report goes next and how it can also drive more action from its findings.
I think the three elements that you mentioned are very interesting, but one seems to be a bit new and also very likable. It's the cyber risk.
Yep.
What is it, and how do you think we can fight it or mitigate it?
Yes. Well, interestingly, when we were sitting around the table, if you like, the editing group with the report, cyber was coming up through the survey as a risk, and we weren't really sure whether to deep dive on it because already there's a lot of talk and a lot of news, and is it really a risk or not? So, really, what we've looked at is cyber beyond the data breaches, and what is the bigger picture risk. We had some support from an organisation called the Atlantic Council, who've also done a lot of research onto this, and it's really the big picture of what happens to the Internet of everything, where there's so many connected devices, so many systems connected to the Internet, and what happens if we start to see increasing levels of problems, whether it's hacking, viruses, theft, governmental intrusion, all leading to a lack of trust, a lack of confidence in the Internet, and is there then a balkanization, a process whereby the Internet starts to break up? So that's the sort of the risk that the report is exploring in the cyberspace.
And what can we practically do to protect ourselves against this? Is there any concrete measures that we can start putting into place to fight against it?
As I think you're alluding to, a lot of this is really requiring government policy or multilateral collaboration, and that's in the news right now. So some of the Internet governance organizations, ICANN, the Internet Corporation for Assigned Names and Numbering, they're kind of freeing themselves a little bit from the US. There's some tensions there. So some of this is breaking news, but clearly we want to encourage strong governance and support of organizations like ICANN. That's difficult for the individual corporation to do, though. So the individual corporation needs to think about its own risk management. Obviously, some of the basics around data security. And if you're a risk manager in a corporation, you should be talking to your chief investment officer or the IT department, making sure that they are really following the guidance and standards that are out there. But moreover, when you look at this, the level of interconnectivity in the Internet, it's the risk officer, the corporate risk officer should be looking beyond their regular horizon and looking at counterparty risk from an IT perspective, outsourcing risk, and so on and so forth, because it could one of the big data breaches recently, for example, was from a subcontractor, right, who got access to certain information and so on. So the risk horizon needs to be broader. It should absolutely be a board level agenda item. Make sure the board are aware that any organization now does have real risks from this. So charity begins at home. It's an old English expression. If you get the risk management right at the single organization, that's a start to helping deal with this systemic risk.
Could this type of risk also represent a commercial opportunities for carriers?
It certainly can, and there are products in the market. We have a product in the market. It's probably fair to say that the coverage is relatively specific. So the total worldwide insurance premium on dedicated cyber products is about $1 billion. The total worldwide losses, economic losses, are probably 100 times that, or maybe 200 or 300 times that, according to some measures. So the insurance penetration, if you like, of the losses out there is clearly less than 1%. It will take time for that market to open up. It's a little bit of an uninsurable risk in some respects at this point in time. It's hard to know what can happen, but as part of a risk mitigation measure, organizations should certainly think about cyber insurance.
If I reflect a little bit back on all the risks that you were mentioning this morning and that are mentioned in the report, and link it to your organization, how you make sure that in the risk management activity and in general in the company activity, you keep an eye to something that could take place in many years, but also figure out things that can be done concretely, not only on cyber risk, but more broadly on all the items on the agenda of this report.
I mean, the fun of risk management and the challenge of risk management, of course, is that it's so broad. So, day to day, we have well embedded models for windstorm and so on, which would be core to our business, and they are run regularly on a quarterly basis and so on and so forth. So that's highly, if you like, industrialized in our business. If it comes to something that's a little bit more out there, whether it's cyber risk or, for example, what would be the next asbestos, what would be a catastrophe to the casualty lines, that's much harder to take a quantification on. And so we have various initiatives. We have an emerging risk group. I think that's a number of insurers do that, which scan these exogenous risks, try to see, give them some ranking, how close are they, how large might they be. We push very hard for our researchers on emerging risks to make sure they do translate their knowledge into something that's as tangible as possible. We report it through our various risk committees, so we make senior management aware of it, which also gives it a little bit of extra push if action needs to be taken. And so just generally keep scanning, and the phrase we use a lot in Zurich is the 360-degree view of risk. You can't, the risk officer doesn't have an asterisk saying I'm the risk officer asterisk except for, right? We have to look at everything, whether it's data, whether it's climate, and so we do our best to keep that 360-degree picture.
Well, thank you very much, Steve, for your answers. I look forward to our next meeting.
Yeah, thank you very much.